When we talk about value stocks, we're really just talking about those companies that are the cheapest in the market, irrespective of what sector they're in or what the company actually does. Now, in the second half of last year, from July 2016, value stocks had a very strong period of performance, but we think that can continue further in 2017. When we look back over the last 40 or 50 years, when we look at previous periods when value works as an investment style, it normally lasts for about 27 months and you get 27% outperformance. So far, we've been rallying for 6 months and the performance is actually quite small. So we think we're set up quite well. The macro environment remains conducive, we think, for value, and by that we mean that the growth environment is improving. Inflation is actually rising and interest rates and bond yields are also going up. Historically, that confluence of factors, if you like, tends to lead to value stocks to outperform. The sectors that are leaping out to me at the moment are financials, particularly banks and insurance. Within banks would highlight a skew towards some of the investment banks, and then within the commodity space, mainly the oil stocks. And we quite like the oil service names at the moment. They still look very cheap on some of the metrics that we look at, but also there's what we call the super major as well, the big oil companies that people are familiar with. They're sitting there with very nice dividend yields of 5 or 6%.